Hey there, this is Bill with smarttrades.com, and today is Thursday, March 14th. It's about 12:40 p.m. Pacific time, and as always, we'll start off with the S&P and our long-term count. And if you would like more frequent updates, please visit me at smarttrades.com. I actually have a new service there for just $19 a month. That is a bi-monthly service that'll cover the stock indices as well as individual stocks, particularly high yield stocks. And that's again just $19 a month, and a couple of reports each month, possibly more as needed. And I'll show you some examples of what we've been doing with that service lately. Again, that's at smarttrades.com, and just scroll down to the stock service for $19 a month. We also have the full service, $49 a month, and that includes reports pretty much every day, as well as the dividend stock report that I just mentioned. In addition to that, there's a live feed on Twitter. At any rate, let's get to it. The S&P 500 approaching our long-term target, 1576. That's the 2007 peak. I used to get hate mail for disagreeing with the various analysts out there who were saying that this was a wave two, but the Dow, as you probably know, has already exceeded that 2007 peak. And the S&P is quickly approaching, and just about everybody in the Elliott wave world all of a sudden is starting to agree that this rally is indeed a B wave. And that is that the entire move down from 2000 is a large A. The rally back up is a B, and possibly just A of B. In other words, we still have B down and C back up to complete the B wave in a flat, but it's too early to know that. Anyway, the telltale signs of a corrective rally are quite clear. The common ABC's up, and the diverging ADX in volume not confirming the new high. Again, the ideal target's 1576. We're already into a range where you can basically call that a hit if it were to roll over now. But the ideal scenario for a B wave, or at least the most likely one, is a retest of the beginning of wave A, which again, around 1576, the 2007 peak. Here's the shorter term count. Just back to this, I use this just to denote the broad strokes of a corrective rally. We'll break this down differently on the daily chart. A up, B down. We've already exceeded the ideal A equals C, and from there we have a possible 5 up. We're getting towards the top of that channel, and we're testing that really right at just about now as I speak. And here again is that 1576 peak, the ideal scenario for a B wave. Shorter term, we've got breadth divergences on the rally, and a possible 5 up, even on a smaller scale, a little bit of a wedge, very slow momentum, non-confirmations in breadth. All these things point to at least a short-term correction, if not a larger scale top. Certainly a place I'd be wary about the market. All that said, B waves are unpredictable, and a test of 1576 or even beyond is certainly not out of the question. Nasdaq, very tight range. The longer term count's a little more difficult. However, we have a possible 5 up still in progress, and again, the breadth divergence. Nasdaq futures, very tight range over the past week or more, and non-confirmations from volume. We're up against the top of a possible wedge type formation. Definitely cause for concern in my book, particularly if we break the bottom of this consolidation pattern, which is also the top of the previous rally. Natural gas. We've been looking at a possible bottom here, and we have in fact converted. It's possible this is an ABC up, but it has taken out resistance short term, and natural gas, if indeed this is a larger scale low, could rally even in a corrective pattern back up to about 420 or so. Not sure it's going to get that high. These are the kinds of things we update on an ongoing basis. Bonds holding at support so far. They could go a little bit lower. Bottom line is we think that the bonds are in a corrective pattern, pretty clear. ABC down, in what you can label as A, ABC up B, and then this is a C wave perhaps. Now again, if you draw a parallel channel off of the bottom of A here, it goes a little bit lower than the 140 level. So somewhat lower prices are possible, but bonds are acting a little bit like they're trying to bottom now. Gold and silver also very much corrective in my book on the decline. The correction is still ongoing perhaps. We have a clear A, B, C down. Perhaps that's A, B, C, X, A, B, C to complete it down below 15 or so. Difficult count on the short term, but longer term I think that it clearly counts, at least so far, or best counts as a corrective decline. Silver, same thing. There's that clear A, B, C, perhaps an X, A, B, C working down. I do have some trouble with the short-term count, so with that in mind, I'd like to see it play out. We're not missing much. Gold and silver basically sideways to lower over the past several months. Crude oil, also very much a corrective style pattern, probably best counts as a contracting triangle. Unlike unleaded gas, crude oil is really net sideways over about the last 3 or 4 years, and until it breaks out, I would treat this as a contracting triangle and look for more corrective style sideways movement in crude. Okay, now here we have HPT, and this is what the new thing that I've been doing. I look for high yield stocks. I don't guarantee these yields. These are from TradeStation's research data, but certainly I don't guarantee them or know if they're correct. But this is what I'm getting in. And HPT has a nice 7% yield according to TradeStation. And what I'm looking for on these, I'm looking for not necessarily a specific Elliott wave pattern, but generally speaking, a corrective decline, and then a smaller scale corrective pattern to look for an entry on. In addition to that, again, I'm looking for, in this case, high yield, usually good earnings data as well, if as a screen. Showing these about twice a month, and in this case, nice entry down here in the 23 area off of this small scale, perhaps a little bit of a fractal type corrective decline, later entry after the breakout of the larger pattern. And our idea is to take a partial profit on these if we get a nice one, and then hold for the yield as long as possible, perhaps trailing the stop and hanging on to for those dividends. This is FUN, Cedar Fair, and that's got about a 6.6% yield. We would have been stopped out of a portion of that according to the newsletter. Nice entry down here in the 32-33 zone, and we've had a decent rally off of there. Again, a 6.6 yield percent yield according to TradeStation. UPS, again, that nice little fractal right at the breakout down here in the mid 73, 72.50 area, and retest, and then another secondary breakout. Again, the idea is to trail the stops. UPS, about a 2.9% yield according to TradeStation. Campbell Soup, we actually were looking for the initial breakout here of this triangle, but we did get a retest of support and then a secondary triangle on a smaller scale that broke out of that the top of this range. Again, a nice rally in Campbell Soup, about a 2.7% yield. MFA, about an 8% yield. This is a more recent recommendation. We're looking again, we have a breakout point here along with a nice ABC type decline. Again, I'm not looking for a very specific Elliott wave pattern. I'm looking more for the general idea of a corrective style pattern, a relatively low risk entry point. And on this one, certainly I would have my stops up at break even if I were long here. And that yield is about 8%. And finally, ALV. This is a nice, interesting pattern. We had a longer-term triangle breakout, and then a very clear ABC, nice telltale, kind of impulsive C wave down. That tested or retested the triangle, breakout, and from there a nice impulse rally. And ALV yielding about 2.9%. Again, these yield stocks I'm covering at least a couple times a month at smarttrades.com, just $19 a month for that service, and it'll also get you updates on the indices as well, usually on the first and third weekend of each month. Hopefully this is something that you folks can use. I thank you very much for watching. Hopefully you had a good week and a good weekend ahead. Once again, thanks again for Bill at smarttrades.com. Bye-bye.